Well, hello and welcome to this week's edition of the Cash Flow Options program, or weekly video, should I say. Thank you for joining me here on YouTube. Now, we are in bullish opening range mode. Okay, so we are above 3979, which we spoke about last week. Could be a bit of a mini double top here, but obviously the big resistance is going to be the 200-day moving average. We failed there last time. My view is we're going to fail there again, right? We may see a little bit more of a move up, but I think ultimately we're going to fail there at the 200. Another way of looking at it is this chart here. So we've got a downward channel here. We may have a little bit more of a move up here, but I think ultimately we're going to run into resistance and start selling off again. Part of the reasons I think that is obviously all the problems going on right now with people being laid off dramatically, which I spoke about last week. Tens and thousands of people being laid off all around the United States and around the world. And certainly tech companies are finding it harder and harder. We've got China imposing zero COVID strategies, and this is causing anti-lockdown protests. People in China are becoming more and more angry about these restrictions that have been going on for almost 3 years. And it's causing supply chain issues and really putting a big pressure on the global economy, no doubt about that. And, companies like Apple have been moving down as a result of what's been going on. They've got large factories there, and also a lot of their sales come from there as well. And when they have lockdowns like this, it really does put on a lot of pressure. Interest rates rising, causing people to be laid off, unemployment. But this week, we do have a lot of economic news coming out, as you can see right here. This is a crucial week of economic releases before the last Federal Reserve meeting of the year, which is yet to come. But before we get that last Federal Reserve meeting, we've got all this economic news that's coming out this week. We've got consumer confidence coming out, as you can see here, on Tuesday. We've got the ADP employment report coming out on Wednesday. Okay, so we've got the payrolls report there. We've got the JOLTS, as you can see here. We've got the JOLTS job opening estimate that will be coming out. You've then got GDP, the gross domestic product, the total economic output of the United States. This is going to be the second reading for GDP, which is very important. The second reading of the third quarter GDP, which, like I just said, will be released on Wednesday. You've got core PCE price index. You've got the manufacturing PMI, which will be highlights on Thursday, as you can see here and here. Jobless claims and the employment situation as well. So a lot of employment data coming out as well. This is going to be crucial to what the Federal Reserve does moving forward. And the week will give us a good idea on the government's job report as well to finish off the week. So we're going to be very interesting to see the way that Treasury yields react to all this information, and it's going to be very important for stocks and obviously what they do regarding rates going into the last part of the year. So my view is still down in the overall market, and like I say, I think this downward trend will continue going forward. Now, we did see with the overall market that we had the DJ30 or the Dow Jones Industrials have a move up, right? They're up almost 0.5% on Friday, coming right up to this prior high, which it actually took out this prior high. So you could look at that and go, well, it's right just above that prior high here. That's actually quite bullish. Could be a double top. But when I see that, though, when I see the DJ30 or the Dow Jones Industrial outperforming the S&P 500 and the NASDAQ, I see that as a fake out move. Okay, I don't think that that's really an accurate representation of where the market's going to go. I mean, the industrials are only made up of 30 stocks. SPX is made up of 500. The NASDAQ is made up of 100. So much better representation of the overall or broad market, the S&P and the NASDAQ. And when you get the industrials outperforming, it normally is a fake out move. So I don't believe that for a minute. I still believe we're moving down going forward. But having said all that, we've got a lot of economic news coming out this week. Now, if this is all positive, the market's going up, irrespective of what the charts say, irrespective of what's going on around in the global economy and the US economy, right? So we've got to pay a lot of attention to what happens this week because that's going to directly impact what they do for the last meeting of this year, 2022. Now, we're going to be watching the US dollar again. It had a move down to this support zone. Remember, support is a zone, not a specific price. So it's down at this support zone. I do expect to move higher from here, a bounce off this support zone. When the US dollar goes up, the markets go down. And that's what I'm anticipating. Could I be wrong? Sure. Will I be able to make money in either direction? Yes. Right. So either way, we're going to be looking to make money. Now, a couple of opportunities that we're setting up, and we've set up quite a few. I'm not going to talk about all the ones that we have on with our members right now, but let me just show you just a couple of them. One of them is with Tesla. Now, if you just have a look here at Tesla, I'll just show this to you. So we look at Tesla here on the chart, and you can see it's had a big move down, right? We had a triple top, 1, 2, 3. Triple top here, failed there, which is a bearish charting pattern, failed at a triple top at resistance and had a pretty big move down from around 313 down to as low as 166. So it pretty much chopped in half. So big move down there in Tesla, and what the average person would do is look at that and go, goodness me, I'm not touching Tesla with a 10-foot pole. Well, that would be a mistake. Look at what the average person does and do the opposite, right? So when I look at this, I ask myself, what's the real value of Tesla? Is there a way of working out the intrinsic or real value? Yeah, there is. I spend hours and hours doing that, right? So I actually have a formula or a way of working out the real value or intrinsic value of the stock. And my calculations are telling me right now that Tesla is valued at $359.92. It's trading at what, Sean? 182. So it's massively undervalued compared to its real or intrinsic value. What does that matter? Well, the intrinsic or real value and the price will meet at some point. What does that mean in English? That means the price of 182 is going to move up to meet the real value of around 360, right? So what I see when I see a big move down like that in a great stock that's growing its earnings, great free cash flow, great growth estimates moving forward, when I see something like that, I see an opportunity. Why? Because of the skill set, the financial skill set that I have, right? And that we teach our members. So what I would love to do is own Tesla at $160 a share. Fantastic. And not only that, but I want to get paid up front. I want to get paid 5% return for me to agreeing to buy this incredible company at a discounted price. Sounds like a pretty good deal, right? So right now, the stock is $182.86. I want to buy it at $160. So I determine where I buy the stock, not the market. It's a beautiful, beautiful place to be. So I'm going to agree to buy this at 160. I'm going to receive $815 day one for selling the 160 strike cash secured put option. In other words, cash secured means I've got the money in my account to buy the stock if I have to for the 20th of January 2023. So that's a 5.1% return based on the purchase price that I'm looking to buy the stock for. Break even, what I'm agreeing to pay for it, 160 minus the premium I'm getting, $8.15, $151.85. Okay, so that's the break even or the cost basis for me if I do end up owning it. Now, by doing this, I'm getting $815 day one. But when you sell an option, you're taking on an obligation, right? The obligation is what? To potentially buy the stock at 160. So one of two things is going to happen here with Tesla. It's going to finish above 160 come the 20th of January 2023, or it's going to be below 160. The only two things that can happen. If it is above 160, I keep the $815 for every one contract I buy, which means I'm agreeing to buy 100 shares. Every one put option I sell, I'm agreeing to buy 100 shares. So I'm receiving $815 day one. If it finishes above 160, the stock price above 160 come the 20th of January, I keep the $815 and I don't have to buy the stock. End of trade. Okay. Now, if it does finish below 160, I do what I said I was going to do, and I buy the stock at 160. But remember, I received $815 per share, or for every 100 shares I'm agreeing to buy day one, or $8.15 for every share. So my cost basis is $151.85. Am I happy to own Tesla at $151.85 with a real value of almost $360? Absolutely. When an opportunity like that comes up, I grab it every single time, right? So that's one thing that we're doing. Now, another thing that we're looking at here is with Dick Smith, right? That's not Dick Smith. Dick's Sporting Goods, DKS, Dick's Sporting Goods. Now, what you can see here is it has just broken out of this sort of sideways trading range. Okay, you can see that. It's got a gap to fill. See this gap here? The bottom of the gap here is 135.60, so it's got a gap to fill. That could act as a magnet, dragging the price higher. It recently had good earnings, okay? So the earnings estimate was $2.24 earnings per share and revenue of $2.7 billion. The actual earnings was $2.60 per share and the revenue was $3 billion. So they outperformed in earnings per share and revenue. So they did very, very nicely there. The other thing that's going on is that it has high short interest. Over 22% of the available shares that are floated on the exchange have been shorted. So this could result in a short squeeze, okay, with this particular stock, DKS, Dick's Sporting Goods. So I think we might see a short squeeze propelling the stock higher. I think it could even get to, if we go to the monthly chart, I think it could get to all-time highs of 147.43. I think it could easily go there. But let's be conservative and look for it to fill the gap at 135. Okay, so that's what I'm looking for there. It's also got not a short squeeze, but an actual setup that we use called the squeeze, right? Where the Bollinger Bands are inside the Keltner channels. You can see this has been happening for quite a few months here. The yellow line inside the purple line, Bollinger Bands inside the Keltner channels, then the upper line's broken out, and now the lower line is broken out, and we're starting to move up. Gap to fill, high short interest. I like this trade to the upside, right? So looking for it to go to around 135. I've set up several different positions. I've set up a butterfly that could pay me 4-to-1 risk to reward, asymmetrical risk in my favor, 400% return in the next 19 days. I've set up a vertical spread that has a 3-to-1 asymmetrical return. I've also bought a call option, deep in the money, less than 1% of the option that I'm buying is made up of time value, so very deep in the money. There's a couple of different ways of doing it, but needless to say, we are looking for it to move up by the end of the year, so out to 20th of January 2023. So there are a couple of things that we're doing right now. That's my view on the overall market, and still looking for the markets to go down overall, but this week with the economic news is going to determine a lot of where we go, and certainly where the Federal Reserve will be looking to take interest rates moving into 2023. All right, my friends, I hope you found that useful. I'll talk to you again next week. All the best, and bye for now.